The Johannesburg Stock Exchange is Africa's largest exchange by far, with the largest market cap and deepest liquidity. It was established nearly 120 years ago and listed on its own platform in 2006. The JSE has a market cap of 6 billion rand and a price to earnings ratio of 18. And of course, Nikki Newton-King has just taken over as CEO, and she is starting to put her mark on that company. We need to see those results coming forward. What are your thoughts on this one?
It's a tricky one because the JSE is viewed rather like the South African football team, the Bafana Bafana, you know, much loved by insiders but somewhat disrespected in its community. And that's partly because the brokers have always had an antagonistic relationship with them. They operate in South Africa as an absolute monopoly. If you're a JSE member, you're not allowed to do any deals with anyone else.
Which means that you're a very good investment case.
Yes, maybe, although, you know, there are exchange control issues. Other people want to get into African securities trading. For now, they've got a strong position, but they're a little bit hemmed in by exchange control.
What do you make of JSE at this stage?
I think that there's two issues. One is that they keep on having to impair their IT projects. They've written off about 355 million rand, so that's destroying shareholder value. And there seems to be no light at the end of the tunnel. The second issue is that they seem to have a very bloated kind of staff.
Wait, when you say there's no light at the end of the tunnel, do you not think that Nikki and her team are taking the necessary remedial action to address that? It must be high on the agenda.
One would hope so. I mean, I think this BDA project has been going on and on and on. And
but to be fair, she's inherited it. To be fair, she's inherited it.
True. Okay, so the second issue is that their staff overhead, or staff costs relative to the total overheads, are one of the highest of any exchange around the world. So they seem to have a very bloated staff complement, and there's real capacity for them to cut costs there. The third issue is that there seems to be no clarity on their long-term incentive program for senior management. It was voted against recently at the AGM, and they seem to have revised it to increase the ROE targets by 3% to 24%. And that still is yet to be voted on, so they are kind of sitting in limbo in terms of this incentive program.
What's happening here on the graph? Where are we sitting?
Well, we're trundling along, you know, doing all right. I can tell you what this graph resembles, and that is the graph of the overall market. Because when the overall market is doing well, people trade a lot, the derivatives boys get excited, money flows into equities, and when the market goes down, you know, it does too. So what you get here is this kind of hyper pro-cyclicality. In other words, it's like if you own equities and then you add this to your portfolio, it's just like owning the same thing, just on steroids.
It's not a bad option if you believe that equities are going to go higher. Why not get the steroid version?
Look, it's now incorporates the bond market. It incorporates all that future stuff that SAFEX. They've got a very powerful position vis-a-vis selling data. So there's nothing really to argue against. I reckon it's fairly well run, although I accede that these issues around tech management haven't always been well looked after. Whether they are able to sort of fundamentally transform themselves and go global remains to be seen, because they've had very little success in convincing anyone else in Africa to do business with them.
Do you not think we need to give Nikki Newton-King some time here?
Yes, we think that this company will kind of grow around about 15%. I think that the prospect of spectacular growth is hard to see where that spectacular growth might come from. Again, I think there's very little prospect for them to grow internationally. But again, it's volume sensitive, but I think there are moves to increase the annuity income side of the business. But we think that 15% kind of turnover growth or earnings per share growth is doable. We think.
Do you own the stock?
No, we don't, but we'd like to at this stage.
You would like to at this stage. Paul, do you own the stock?
We have clients that own this one. We've got quite a few clients that got cheap shares in the JSE in an empowerment transaction. So, you know, that gives us entree into it.
But at current levels, Anthony thinks it's starting to look attractive?
No, you know what? A couple of years ago, exchanges were thought of as a hugely exciting investment asset class. So Deutsche Börse, the LSE, the New York Stock Exchange and its connections into Europe, and the Vestact and so on. But I can tell you the puff has gone out of that. partly because people got a bit depressed about derivatives. You know, back in 2007, derivatives were the hottest, best thing you could imagine. Then Warren Buffett described them as financial weapons of mass destruction.
Remember that
Now
quote,
you don't want to be
financial
in derivatives
weapons of
so much
mass
anymore.
destruction.
So, you know, it kind of comes and goes. And also there are lots of regulatory issues. Because remember, everybody's trying to buy each other in the exchanges space, and then it gets blocked by this or other irritating European Commission, or, you know, by the FD people in the US, blah, blah, blah. So I don't know. For me, it just feels like a slightly odd little corner of the financial services sector, which is not
But
always
still,
clear.
it's an
how it's gonna-
imperative to how the markets operate in South Africa. It is a monopoly, and a monopoly, by all accounts, is a good investment thesis when there is no competition on the horizon. Am I making sense?
Absolutely. I mean, we try and steer away from trying to predict what other market participants might or might not do. So we think rather just look at the fundamentals of the business. The fundamentals are very sound. We think it'll earn R6.40 to December this year. That puts it on a forward P of 11. We think for a business of this quality, growing at 15%, this company is cheap.
Hot or not?
We think it's hot.
I just wanted you to reiterate that very positive story. Hot or not, Mr. Theron?
No, because the competitive threats, you know, in the US, the same thing happened. ECNs, direct market access, people going around the side. Avoid.